Okay, welcome everyone to the session today. I just want to give a quick shout out about this week, which many of you know. Well, I know Alyssa and Liz definitely know that by now that it is Global Entrepreneurship Week, and specifically Do It in Durham Week. So Do It in Durham was created 11 years ago. BACD is the lead organizer, and we created it as a way to put Durham region on the map, the Durham region entrepreneurship ecosystem specifically. And it's a collaboration of Durham's business support, educational and networking organizations who have come together to encourage and support entrepreneurs, job creators, and innovators who create economic growth in Durham region. So if you're looking to start a business, invest in a business, grow a business, we encourage you to do it here. And thank you to our sponsors. Without their support and contributions, we would not be able to host this event. We have 51 events this year. It's a lot, so definitely need all hands on deck when putting this event series together. So feel free to introduce yourself, your business in the chat, post about this on your social media channels. You use the hashtag #DoItInDurham. This is being recorded, so it will be on the BACD YouTube channel if you want to catch the replay. And I won't take up too much more time, and I will hand it over to Mike Libbey from Your Bottom Line.
Awesome. Thank you, Ashley, and thank you to the BACD and Do It in Durham for having me here today. Lots of fun stuff I want to talk about, but I'm Mike Libbey with Your Bottom Line, COO of Your Bottom Line, and happy to kind of dig into this stuff. And I know some familiar faces in the crowd here, but there's lots of other new people, and by all means, please do toss in questions, toss in your industry, toss in what you're doing there, because I can kind of tweak and tailor some things to what you might be doing. So this is about managing financials for gig entrepreneurs and freelancers. And whether that's something as simple as, hey, I drive for Uber, or I've got this large business, we're going to cover a whole bunch of little stuff today. So we're going to cover stuff such as about us, who we are, what we do, gig workers, types of gigs. HST is an important one we're very regularly asked about. Expenses, what can I claim? That's absolutely one of the top ones too. Other things such as what kind of apps can I use as a gig worker or a freelancer? Should I incorporate my business? What does that entail? What are the pros and cons? How do I get that done if it does make sense? And then just some other stuff that we can do to help you guys as well. So like I said, by all means, chime in, ask any questions. I'm not looking at the chat, but actually, absolutely poke me anytime you need. So this is me. I'm Mike Libbey with Your Bottom Line. Like I said, I'm a COO at YBL, worked at the Ministry of Finance, been with YBL since 2010. I'm a certified Smith Manoeuvre professional. I can't really see any hands, but is anybody aware of what the Smith Manoeuvre is? I see Karen's hands going there. So that's a conversation for another day. There's lots of paths and different kind of unique things with that, but it's about kind of converting bad debt to good debt and some funky stuff that I'd love to chat about at a later point. So who we are. We're a company was founded in 2004. We're a one-man show. Now we're over 25 full-time employees. We were just voted for the 6th time as the #1 accountant or best accountant, bookkeeping, income tax, and accounting firm in Oshawa, Whitby, and Clarington. So we're very proud about that. We've got experience with a variety of industries. We are not a niche firm. We do have some industries that we work with over others, primarily, I would say, but we're not niched at all. We've got lots of gig workers and lots of people in the industries that I've seen mentioned in the chat here as clients. And we're very big on technology. Well, we have an office in Oshawa as well as Belleville. The reality is, I would say about 90% of our clients work with us completely virtual. So we've got clients all over Canada, some in North America, some across the globe. And we do handle U.S. personal tax returns as well. So we're one of the rare ones in the Durham region. So happy to be here. Again, thank you to Ashley for having us here today. So gig workers. So this is primarily about gig workers as well as freelance entrepreneurs. So what is a gig worker? We've got the list on the screen that you can see now. And frankly, a lot of people don't necessarily realize that they're a contractor or freelancer until they go to hit tax time, right? And so it's funny, a lot of people will say, well, how do I get self-employed? What do I need to do? What are my next steps? And I say, well, congratulations. The second you've received untaxed income, you are effectively a sole proprietorship and you do run a business. So these are some of the things we're going to kind of be touching on today, whether that's a ride sharing program such as Uber or Lyft, food delivery, micro entrepreneurs, crowd workers. We've got a bunch of content creators. So obviously got YouTube, Twitch, Kick, and all those fun things. Consultants, artists, and a lot of these people are just doing this as a side gig, right? And so we've got plenty of clients who either have a 9-to-5 job and they're just doing something on the side, maybe knitting something, selling something, Uber, whatever that might be. Or it can, of course, be your full-time gig as well. So completely up to you, whatever works, however much time you've got in a day, quite frankly. So one of the most important things, as I mentioned, is HST. This is something we're very, very often asked about. What does it mean? How does it work? What's the liability? What's the exposure? What am I doing? Right? So in an easy situation or example, let's just say I sell tax services. Coincidentally, I do. And let's assume something costs $100. If I'm not registered for HST as a business owner, I'm just going to charge you $100 for my tax services. If I'm a business and I am registered for HST, I'm going to charge an extra 13% on top of that. And so what I'm doing is I'm collecting from my client $113 now. $100 is still my sale, but $13 I'm holding in trust for the government. And so it's very important to understand that that 13% that you're collecting as an HST registered business is not your money. You're holding that in trust for the government until you owe it to them. And that's based on your filing frequency, whether that's monthly, whether that's quarterly, whether it's annual, you're holding that money for the government. So we highly suggest, as I said, that you put that into a separate bank account so you don't touch it, you don't spend it. Oftentimes people will, but it is a best practice, I would say, kind of out of sight, out of mind, so you don't have to worry about that come tax time when you're filing it or when we're filing or your accountant's filing it for you. So when do I register for HST? Well, if you have self-employed income of over $30,000 in a calendar year, you must register for HST. It's actually not optional. Now, I'm going to put an asterisk on everything I say here today, that it's very much dependent on industry, very much dependent on where your clients are in the country, in wherever that might be, in all over the world. So everything has an asterisk that I'm saying. This is just primarily for people in simpler, straightforward situations. But the classic accountant answer when anybody asks something is it depends, right? And so it's very specific to your situation. But generally speaking, once you earn over $30,000, you have to register for HST. So prior to $30,000, it's completely optional. And so oftentimes we will suggest to people that they register anyways, because what ends up happening is when you file your HST return, which is a separate return from your taxes, what an HST filing is in a nutshell is the HST that you've collected on your sales, less the HST that you've paid on your business purchases, laptop, materials, supplies, etc. And the net result is what you will either get back from CRA or owe CRA for an HST filing purposes. So again, there's an asterisk on a lot of this. And for one easy example is Uber. If I'm Uber ride sharing, Uber actually forces you to be registered for HST, even if you're making $100. You have to be registered for HST to be an Uber driver. If you only focus on Uber Eats, that is different. You don't have to register until you've hit that $30,000 mark. So there's a lot of nuance to registering for HST and some specific kind of industry related items, as well as kind of location related items. So that's really HST in a nutshell. Next topic is kind of just income types. And again, this kind of springboards off of HST just in general, because you have to be careful about wondering what is exempt of HST. So if I sell my tax services to somebody who lives in the States, it could very well be tax exempt or zero rated. It really depends on some nuance. And so you want to make sure, especially as a gig worker, whether that's Uber driver, whether you're creating and selling something on Etsy, whether you're doing something else or just selling some type of service, landscaping, taxes, etc. You want to develop a fee policy. So you want to understand, well, how am I going to track this income? How am I going to bill my clients? How am I going to receive that payment, most importantly? Because the last thing you want to happen is what's called a bad debt. What a bad debt is, that I hope nobody here has to learn, but basically you've provided the services to a client and you've invoiced them and they've fallen off the face of the earth or they're unwilling to pay you. So you want to make sure that you're tracking your income and your understanding of the nuance in regards to HST as well as kind of payment methods. And we can help you kind of understand this, and I'll be touching on this a little bit more. So again, one of the most important things that we're asked by a lot of people is, well, what the heck can I claim? And so ultimately, I provided, there's 2 slides here where I'm providing just some general common expenses that are very common for gig workers. So advertising is super simple, easy one. So I'm advertising paid ads on LinkedIn, on Facebook, on Instagram, TikTok, wherever that might be. All of those are justifiable expenses as long as it's for your business. And we often say that as long as you could sit across the desk from CRA and say, I would not have spent this money or bought this product if it weren't for my business, there's about a 99% chance that you're going to be able to write that off. And the reason for that is, easy example, we've got a lot of real estate agent clients who say, well, I only bought this suit because I'm a real estate agent and I have to look professional for my clients. Well, CRA politely does not care. They don't care about that. If you put a logo on that, now it's become a uniform, and yes, you can absolutely claim that, but most people aren't willing to put a logo embroidered on their suits or anything along those lines. So that's why we say that I would highly suggest you write off as much as you can, or at least get the advice to be able to understand what you can write off. But if you're putting money into the business, then there's a high chance that you're going to be able to write off X, whatever that might be. So you got your advertising, you got your licensing, dues and subscriptions. Don't forget professional development fees that you might be expensing. Accounting, bookkeeping, so our services, you can write that off as a business owner. Marketing, public relations, insurances. So certainly when you've got a business, you've got some form, hopefully, of business insurance. You can certainly write that off. Cyber security insurance is a big one these days. Tons. I mean, especially in our industry, we see a lot of people. I got this email from CRA. I got this text from CRA. I got this e-transfer from CRA. So you want to be careful about those things as well. So very important to have your bases covered from an insurance perspective. Now, meals and entertainment. This is one we're often asked about as well. You can only claim half of the meal. So what that means is, let's just say I take a client or a colleague or somebody out to dinner. What ends up happening, assuming that meal let's just say costs $100. Meals and entertainment is one of those expense categories that's prorated. So when I provide my accountant that $100 receipt, they're going to put that $100 on my tax return, but you only actually get to claim $50 of that. So that is only what CRA is effectively stating, is you can only write off the client's meal as opposed to whomever has kind of taken them out. Another thing with meals and entertainment is you can actually, if you have a team of employees, you're able to have 6 company events per year and write those off in their entirety with no proration. So that's very good for a lot of people to know and to understand. Office expenses, of course, this is really a catch-all for the most part. Postage, office cleaning, etc. You've got other things such as office rent, cell phone, internet, that of course you can claim there too. And subcontractor and referral commission fees as well, of course. And so interest and bank fees is, a lot of people ask the question, can I write off my fees? Can I write off my fees? And so from a CRA perspective, you're only actually able to write off the fees from your bank accounts or credit card accounts if the account is listed underneath your business's name. So be careful about that. Travel is also one we're asked about commonly as well. If I take a trip to the Bahamas with my family, can I write that off? Short answer, no. Longer answer is basically, if you can justify that 50% plus one of the days has business-related activities on them, then yes. And so let me break that down a different way. If I've got a 4-day conference in Florida and I stay there for a week, the majority of the trip, 4 out of 7, has business-related activities on it. And in that case, I can write off the flights, the hotel, the meals, the Ubers, etc. So always ask your accountant whether a trip is justifiable as a business expense or not, because that could be a big one that you don't want to leave any money on the table. Capital equipment. So have you bought any larger assets for the business? Now, computers, tablets, printers, those kinds of things easily can be written off as an office expense, depending on the cost. Do you want to? Do you need to? So that's something worth discussing with your accountant as well. And then, of course, you've got vehicle expenses. So that's another prorated one too. As a sole proprietorship or a partnership, you basically track all of your gas, your insurance, your repairs, etc. You provide all of that to your accountant. And the part that a lot of, well, every taxpayer doesn't really like is you have to track your mileage. So what we're effectively going to do when we're filing somebody's taxes is we're going to say, okay, you gave us all these expenses. Tell me how many kilometers you drove in the year for business purposes out of how many kilometers total. And let's just say it's 7,500 out of 10,000. What's going to happen is that 75% is going to prorate all of your fuel, repairs, etc. So you're able to claim the business portion of that. Same thing with your home office. Heat, hydro, home insurance, mortgage interest, property taxes, and water. We need to know the percentage or the amount of rooms in your house that you're utilizing for business purposes, and that's how you kind of get that claim. And by the way that I'm speaking right now is specifically pertaining to sole proprietorships and partnerships. I'll get to the corporations a little bit later. The wages and benefits, of course, you've got payroll, etc. And platform fees. Certainly don't forget about that. So if I'm an Uber driver, if I'm selling something on Etsy, if I'm selling something on Amazon, you want to make sure that you're claiming the deduction. So they're usually taking a fee off the top before it hits your bank or hits your sales. You want to make sure that you're claiming that appropriately as well. So what are some apps, I'll say specific to kind of gig workers? So we're very, very big in the Intuit ecosystem, and we live and breathe QuickBooks Online. There's a lot of fantastic products out there: QuickBooks, Xero, FreshBooks, Wave, Sage. There's a lot of different options. We've got about 1,000 clients in QuickBooks Online, and so we live and breathe it. And in our eyes, it is by far and away the best software out there for a small business owner. It does come with a cost. Of course, we can provide you a discount should you go through us, but it's fantastic. Our favorite part about QuickBooks Online is the bank fees. By far and away, you connect your bank accounts, you connect your credit card accounts, downloads all the transactions, and you can set up bank rules to have QuickBooks automatically enter that for you, saving you considerable time from a bookkeeping perspective. So that also has a mileage tracking feature as well. So that helps you out when we ask you inevitably at the end of the year, how many kilometers did you drive for business? So that's kind of an out of sight, out of mind approach too. Dext is another one that we highly suggest as well. So a lot of people are losing receipts, forgetting receipts, they've faded, something's happened. Dext is a good receipt capturing service you can take a picture with, and it uploads directly. The OCR technology extracts all the information and you connect it to QuickBooks Online. So it's super powerful where you can have those receipts and be audit proof kind of all in one. Cinder is another good one, an up and coming one that if you have more than one merchant account or e-commerce platform, or you sell in different currencies and countries, it's a very, very comprehensive one-stop shop where you can kind of have everything flow directly through there. And of course, Amazon, Shopify, Etsy, they all have their own kind of e-commerce in the back end, and most of that will plug into QuickBooks Online. And depending on your scale, it may end up being worth something like QuickBooks Online, connecting it, integrating it. It really depends on the scale, and we walk a lot of people through what makes sense. Should you just use our simple business template, or is it time to have something a little more comprehensive and robust like QuickBooks Online with all of these apps here? Merchant accounts. So of course, if you're going to take payments, that's not necessarily through Uber or something that directly kind of pays you, or if you're selling on Etsy or selling in person at trade shows, whatever that might be, you're going to need something like QuickBooks Payments or Stripe or Square. Very important to understand the pros and cons of those, and certainly the fees associated with it. I know a lot of that will scare people away. They're not necessarily cheap, but oftentimes ease of payments will end up be worth it. And a super simple, free project management tool. Notion's a great one, customizable beyond belief. There's templates at the yin yang for that you can download for free directly online. There are paid versions of it, and there obviously is limitations just like any other product, but Notion is a fantastic one that you can use, that we can help you out with too if you got any questions on that. Of course, there's 1,000,001 different apps, but these are just the high level kind of gig ones too. So we can help you out should you end up wanting some help with the QuickBooks file setup. Bank feeds and rules are the best. customization of it all. We can help train you, understand how to do it yourself, show you where to look for financial reports. Of course, it's the backbone of anybody's business. How is my business doing? Where is my money going? And of course, just general advisory, implementation, tax planning, and importantly, the review. Right, for all of our clients, whether they're using QuickBooks Online or any other product, you need to make sure that you're having a review done to make sure it's accurate. Even if we train you, even if somebody trains you or YouTube has trained you, you want to make sure that somebody else is looking at that as a second set of eyes before it hits your tax return. So sole prop versus corporation. Ultimately, most people as a gig worker or freelancer will start out as a sole proprietorship. It's simple, it's straightforward, it's easy. You are the business. It all just goes on your personal tax return as an additional schedule. Slightly more complex, but certainly comes with its benefits, as well as drawbacks, as a corporation. And that is definitely not a decision you want to make yourself. You always want to talk to a professional in regards to what is the most appropriate structure for me and for my business. So sole proprietorship by default. What do I have going on today? What do I expect for the future? Should I incorporate? Are there going to be benefits of that? And so there are certainly some aspects to consider in regards to, should I incorporate my gig business? Are you paying more than 12.5% or 12.2% of combined CPP and personal taxes? If you're going to make more money, would you be able to leave it there? Do you want to save more money for retirement? Could you benefit from income splitting? And there's very important rules in regards to that. That's why you see that asterisk there. Are you going to be selling your business at some point? If so, you've got what's called a lifetime capital gains exemption. And when you're incorporated, you can sell your business up to almost $1 million completely tax-free. Whereas that is not an option when you're a sole proprietorship or a partnership. So that's very important too, as you're looking at the trajectory of you and your business. Where are you in your professional journey? Are you looking to qualify for a mortgage? And mortgages become extremely important, other than the obvious in today's world, but there are pros and cons to qualification from a mortgage perspective, because one of the goals of incorporating is to try and leave as much money as you can inside of that business. And when you do that, what's ended up happening is now you're an employee of your corporation and you're intentionally taking out less money. Therefore, your personal tax return, which a mortgage broker is going to look at, you might look less desirable, even though, yes, you're now an employee versus self-employed. If, let's just say, you made $100,000 net income as a sole proprietor previously, but now you're only paying yourself $50,000 from your corporation, your income theoretically has gone down personally, albeit intentionally for tax planning purposes. It's important to factor in mortgages to the equation. And so an overview of a sole proprietorship: it can't own property, insurance policies, or make investments. It's not a separate legal entity. You are the business. There's no separation from a liability perspective. It doesn't file its own tax return. It's just an additional schedule that goes in your personal tax return. That's a common misconception for a lot of people who will come through the door starting a business is, well, now I've got 2 tax returns. It's a sole proprietorship. You don't. It is one and the same. It's just an additional schedule that goes on it. The HST filing, if you're registered for HST, is absolutely a separate return, but your business itself is not a separate return. And so the more that you earn, the higher your personal tax bracket goes, whether you like it or not. So from a sole proprietorship perspective, you've got some compliance items, right? You've of course got to have your bookkeeping, which we understandably suggest that you keep up to date all day, every day as best you can, because it seems that much more daunting at the end of the year if you're going to be trying to catch up for the year in its entirety. You've got your HST filing, so that's either monthly, quarterly, or annual, and the due dates are based on that as well. And so you got your personal taxes. So by default, if you don't have a business, your personal tax return is due on April 30th every single year. But if you're self-employed, your tax return is actually due June 15th. So you've got a little bit of extra time. However, if you owe any money for that business, that is due April 30th. So it often begs the question, how do I know what I'm going to end up owing if I haven't filed my return by April 30th? And so we suggest for most people, I'd still say keep April 30th as your internal deadline, but you've got that little bit of wiggle room and leeway should you need it until June 15th. And very important to note, Whether you're talking about HST filing, personal taxes, or corporate taxes, if you owe more than $3,000 for each or any of these, CRA requires you to pay that on time by April 30th, but then you have to pay quarterly installments. They are catching a lot of people with this, and quite frankly, they're terrible at notifying people about this. But let's just give you an easy example. Let's assume that I owed $4,000 for my personal tax return April 30th of this year. I have to pay that $4,000 by April 30th of this year, but I also owe them another $4,000 in quarterly installments of $1,000 each, effectively prepaying my next year's tax return. So it helps from an optics perspective. Hey, I don't have to rip the Band-Aid off in regards to paying $4,000 in one shot, but they will happily charge you installment interest if you don't make those payments. And they don't really tell you about it until you get that bill in the mail from them. For some reason, they've done this for about 6-7 years now, but they're not very good at telling people that that's what's going to happen. So be careful and be aware of that $3,000 threshold. So now for the next few slides, I'm going to effectively turn everybody into accountants as best I can. And so I'm completely kidding, but what I found has kind of helped resonate for a lot of people as I do presentations like this. I'm never going to make you file your own tax return, and God bless you if you do. If you're confident, by all means, have at it. But I do find that it helps people understand that this is what the end result is, right? And this is a sole proprietorship or a partnership. This is not a corporate tax return, but this is where all of the information goes. So to understand that when you're doing your bookkeeping or somebody's doing your bookkeeping, why am I tracking all this stuff? It's because you have to submit everything on your personal tax return right here. Right. So this is called a T2125 statement of business or professional activities. This is the schedule that I've kept referring to. And so CRA asks for general things, your business name, address, what's your main product or service, what's your industry code. So this is how they get a lot of information comparatively and compare this business to that business or different individuals and their businesses together. They also ask for your internet web pages as well as all that information. Now, that's not mandatory, so very often it's not actually provided, but they do ask it. Then you've, of course, got your business income. So whether that's from a T4 or a T4A, or just generally speaking, I've collected $10,000 in sales. You've, of course, got to submit that to CRA. Now, there's something that I didn't mention in regards to HST. Some industries are allowed to use what's called the quick method. And I mentioned earlier that an HST filing in a nutshell is the HST you've collected, less the HST you've spent, and the net result is what you owe CRA. The quick method's an easier version. It's okay if I collected 13%, that's fine, throw it out the window. I only owe the government a certain percentage of that, about 8.8%, so you don't need to track anything. And that's only relevant for some industries. But that's certainly relevant for your accountant for your tax return. We've also got other types of professional income or other related income that could go on here as well. So that's just the sales piece. I know it looks a little bit scary, but effectively very important. Yes, Ashley.
There is a question here. So from Leslie, prepaying your installments, is there any document you need to submit, or can you just send the CRA money?
That's a fantastic question. So we actually have extensive instructions in regards to how to pay the government that we can provide anybody should they want it. So if you're paying online, yes, you certainly need to provide them, whether it's your SIN, if you're paying personal taxes, or your business number, if you're paying your corporate taxes, payroll taxes, or HST. So you certainly have to identify it that way. If you're mailing them a check, let's say, you've of course got to put your SIN or your business number on there. But if you're going to the bank, banks will actually require you to bring in some sort of a remittance voucher, which can be a little bit not ideal in a lot of circumstances, because the lovely people, once you pay them online once, the lovely people at CRA will stop sending you those vouchers and they can take a few weeks to get you. So we do suggest most people pay online. I know that's not an option for everybody here, but that will help you out. So yes, you do need something ideally to pay it.
Okay, great. Thank you. Liz, I see you raised your hand. Did you want to unmute yourself?
Yes, thank you. Back to the previous slide of the beginning of the T2125 form.
Yeah.
One of the things that I've come across today and yesterday that sort of put me off, the sole proprietorship, I understood that the name of that company had to be your legal name. And it couldn't be any other name. If you wanted it a different name, or you added something on the end, like cleaner, you had to incorporate. And when I look at this form, it's asking for both your name and the business name. Can you give me any insight on that?
I sure can, absolutely. So it's called a master business license. So you do not actually need to incorporate just to get a different name, whether it's Mike Libbey Taxes or Your Bottom Line. You can own the rights to that, quote unquote. And it depends if you're going provincial wide or nationwide, but you can get what's called a master business license that will allow you to have the rights to that name just as a sole proprietorship or a partnership. So definitely not mandatory to incorporate just to get a different name than your own.
And do you get that name through the provincial government or the federal government, or?
It's you could get kind of it depends. My favorite accountant answer. It really depends on where you're going, what you're doing, but for the most part, I've found that people will just go through the provincial government. I can certainly shoot people some links if they'd like to register a business name specifically, whether it's provincial or federal, and go down that path with you for sure. It's optional though.
That would be great. Thank you very much.
No problem. All right. So the next piece is COGS. So that's cost of goods sold, right? So you've got your high level, you got your total sales, less your cost of goods sold will get you your gross profit. So what's included in that? So if you're, again, coming back to gig workers, let's just say I sell stuff on Etsy. I knit or I create widgets, whatever that might be. You may have some opening inventory. So if last year you had closing inventory of $10,000 worth of X product on your shelf, that will start as your opening inventory. You add the purchases or any direct wage costs or subcontractors if you have those, any other costs, and the net result after that will end up being whatever I've still got on the shelves, right? And so you do, unfortunately, in most scenarios, have to kind of track whatever you've got on your shelf. Now, if it's a negligible amount, that might be a different story. But if you've got kind of an abundance of inventory that either is the reality or it should be worthwhile to carry that expense forward to next year, that's something worth discussing with your accountant. And so generally speaking, here's your expenses. So I covered the majority of these already in those other slides. But I still do keep this slide in here to have people understand that at the end of the day, the majority of your expenses will need to fit in one of these boxes, right? Now you've got this spot down here, other expenses, that you can certainly put things like professional development, training expenses, those kinds of things. So you are able to have a little bit of liberty in regards to breaking that down. But we're of the belief that we don't necessarily want to give CRA any more information than we need to. So in an ideal scenario, we will try and fit as much as we can within the confines of these boxes. And so you'll see here, you get the meals and entertainment, 50%. Whoops, I accidentally clicked there. So you've got the 50% for meals and entertainment, and then you've got all the other expense types that I mentioned, bad debts, insurance, repairs, etc. Another important one that I like to bring to people's attention, if you're doing landscaping or something where you're purchasing gas for something other than your vehicle, you always want to keep that separate, because you're able to claim that in its entirety. So let's assume that I've got a truck I use for landscaping, and I use it about 80% for business. I'm able to write off 80% of those expenses. But if I also purchase gas for my lawnmowers, my bobcats, etc., that's solely used for business purposes, that's why this spot exists here. Fuel costs except for motor vehicles, because you're allowed to claim that in its entirety. I know for a lot of gig workers as well, or people that are using Amazon or Etsy, etc., those kinds of things, delivery, freight, and express is a big one as well. So usually, most times, the expenses will fit in one of these categories. So you got your home office. I briefly touched on this earlier as well. CRA has expanded this a little bit in regards to kind of how the pandemic has shifted, as well as employees who are able to claim home office expenses. A lot of people are working from home now, so they put a little bit more effort into this. At its core, like I mentioned, from a proration standpoint, you've got your heat, hydro, home insurance, general repairs and maintenance, mortgage interest, property taxes, water, security, those types of things. And so you're able to claim a portion of your home, right? If I've got 8 rooms in my house, excluding bathrooms and hallways, and one of those is my office, then I can claim 1/8 of whatever those expenses might be. If you need a further proration, whether it's a daycare or it's somebody who's using the kitchen table instead of an actual room in their house, you may have to go to the extremes of saying hours per day, days per week, weeks per year. Or if you're both, you and your spouse, using the kitchen table, you may have to go one step further and mention the spouse's share of the business there too. So a lot of people will ask us, well, I wouldn't say a lot, but some people will ask us, they say, well, I heard from a friend that if I claim these expenses, then I might pay capital gains on my home. And that's not the case. This has no risk, no exposure to having you pay taxes or capital gains taxes on your property when you sell it down the line. That's only if you depreciate the value of your primary residence. So my house costs, easy math, $1 million. If I chip away at that and take a percentage of depreciation on the value of my primary residence, yes, you are then theoretically exposing yourself to unnecessary capital gains. But by way of just claiming a percentage of your heat, hydro, home insurance, etc., no risk, no exposure there. Same kind of thing with your vehicle expenses. Again, I kind of already touched on this a little bit, but you've got your fuel, your repairs, your insurance, your licenses, your 407, your CAA, etc. Then, of course, we've got to ask for the pesky kilometers that you drove for business and how many kilometers did you drive for personal use. That's all prorated, that all determines it. And one of those common questions we are asked is, should I buy a vehicle? Should I finance a vehicle? Should I lease a vehicle? Should I put it in my business? And again, nobody likes this answer, but it depends, right? And so everybody's situation is terribly unique, for the better or worse. And so you really want to have somebody like your accountant run that analysis for you. Does it make most sense to put it in the business? Does it make more sense to get a potential mileage reimbursement if you're incorporated? How does it work? Well, if it's financed or if it's purchased, you're able to set that up as an asset of the business and claim depreciation on that throughout time. If it's leased, you're able to claim those lease expenses up to a maximum on an annual basis as an expense as well. And all of that is prorated based on the business use. So you've got your income, less your cost of goods sold, less your home office and vehicle expenses, less your general expenses. That gives you your net income. And so if your business is all you've got no other T4 job or anything like that, that's going to be your taxable income, right? You've got other things to factor in, like your potential RSP deductions, donations, etc. But this will all basically drive whatever tax bracket you might end up being in. But that's going to be your net income of your business after all is said and done there. So that was all for sole proprietorships and partnerships. But we're very commonly asked, and I know I keep saying that, but it is the reality, but we're very commonly asked, should I incorporate? Does it make sense? My brother's sister's dog told me that they saved money by way of incorporating. And so we're also asked, what's the magic number? Mike, what's the magic number of when it will make sense for me to incorporate? And if somebody tells you there's a magic number, quite frankly, they're not telling the truth. Because it's not actually about how much money you are making in the business. It's about how much money you might be able to leave inside of the business. Because if you make plain easy numbers, excuse me, if you make $200,000 of gross income and you've got $100,000 of just general expenses, leaving your net income to $100,000. And you need all of that money to pay for your house, to pay for your car, to pay for your groceries, to pay for your personal trips. Then it doesn't matter, right? You're spending all of that money, there's none left. And if in the same scenario, you incorporate that business, but you have to, now you've got the separate entity that is the corporation from you, but you're taking out $100,000 salary, you've now just stripped the corporation of all of its profits. And so you're not actually saving taxes over there. And now you're right back to square one, giving yourself a T4 or a T5 or T4A for $100,000, paying the same amount of taxes and a whole lot more in accounting fees. Now, there are more reasons that you'd incorporate. That example was just about profitability, but there are other things like a level of separation from a liability perspective, maybe future-proofing some things, maybe holdco for investments or rental properties or things of that nature. Maybe you want to set it up, have some rental properties in there and set up a partnership with a friend or a family member or something like that, just to keep it a little bit separate from us. So as you can see here, the corporation is a separate legal entity The corporation owns the business. You just work for it. It's separate. Now it is a separate tax return. It can distribute funds potentially to your family members through payroll or dividends, depending on the corporate setup. And you got to be very careful about that, making sure that they do genuinely work for you, and you've got the paper trail to support that. You can leave the money inside the corporation, right? I'm often saying every day, treat your corporation as a pension plan. The more money you leave inside that, very likely the more taxes you will save. And so you want to take advantage, ideally, of the corporation's net income of about 12.5%. Now, that doesn't touch on passive investments or passive income inside of a corporation. I know there's a couple of people here who have rental properties and other things that may be taxed at a higher rate. But generally speaking, for gig workers and things of the nature, you're likely going to be taxed on the net income inside the corporation about 12.5%. So this, excuse me, is about the scariest slide I've got today, but it's arguably one of the most important. And so let me kind of quickly break it down to what you see here. So under example 1, got your gross business income of $220,000, general overhead expenses of about $70,000. That leaves your personal income to about $150,000. But on that $150,000 is the sole proprietorship. I'm paying $45,000 in taxes and $5,600 in CPP because you're paying it for the employee and the employer. My net business income is still $150,000. So my total taxes and CPP I'm paying is about $50,000 between these two here. But if I incorporate, now we're example 2 here. If I incorporate and I pay myself dividends, well, same figures up top, but I only need $60,000 to live. Well, yes, $150,000 is great, but I've got a spouse who makes good money, or I have a T4 job that pays me, or I just live a modest lifestyle. If you only need to take out $60,000, you would take out $67,000 because you got to pay the taxes on that somehow personally. That still leaves the corporate net income at about $150,000. But instead of paying $50,000, inside of the corporation, you're only paying about $18,000. So all told, personally, you're paying about $7,200. Corporately, you're paying about $18,300. You've saved about $25,000 in taxes overall in this scenario. Now, that all seems all fine and dandy, and these are real scenarios that I'm looking at here. But it is extremely important to note that you're now living personally off of $60,000 as opposed to potentially $150,000. And so some people will say, well, I need that to put me into a budget for myself effectively. Some people will say, well, that's fine. I'm perfectly fine taking out 90 or whatever that is. And so we run these scenarios for a lot of people to have them understand, it does it make sense to incorporate or not? And again, this is just talking about numbers today. There could be other factors, whether it's future growth, whether it's liability, that will kind of impact that decision as well. But same kind of thing with salary. Salary is a little different because it's actually a corporate expense. So it's a payroll expense of the corporation. So you do pay a little bit more personal taxes, $16,000, and you're paying CPP on payroll. Important to note that you don't on dividend withdrawals. So your net business income inside the corporation goes down to $70,000. You're still paying yourself roughly $60,000 because you got to pay the taxes and CPP here. So you're only paying $8,700 in corporate taxes. So again, you're saving, and this is a very fictitious scenario. These are real numbers, but that doesn't necessarily mean that it makes sense for you. And so you have to have somebody run these numbers for you. And optically, people will say, ooh, I want to pay myself dividends now because that seems a little bit more attractive, but it may not be. There's pros and cons to both of them. Go ahead, Ashley.
Okay, there are a few questions here. So first question, are all gifts and gift cards a write-off, including the LCBO?
It depends. And that is truly everybody's least favorite answer, but it is the reality. It does depend on kind of your industry, what you're doing. CRA does not really like, I'll say, cards to meals and entertainment, cards for gas, gift cards, I'm saying, as well as LCBO cards. We've been able to strong arm them many times. I know a lot of real estate agents. How is CRA necessarily in a position to say, did I really give this gift card to my client or not? So I would absolutely put that through for sure, as long as you can justifiably sit across the desk from CRA and say, yes, I gave this to a client and here's why.
Okay, next question. This might be a long one. Okay, at a high level, can you please explain what expenses can be claimed for an e-commerce business such as Amazon?
So a lot of the expenses have already, I feel I've already kind of covered here for the most part. Now, really something like Amazon, that's going to be the cut that they're taking off the top. That's going to be an expense. Whatever they've directly deducted off of whatever they're going to end up paying you in your bank account. If you're using something such as, if you're delivering it yourself, it's going to be the delivery fees. Really kind of depends what you're selling on Amazon and how much they're doing it versus you're doing it. I know it's optional one way or the other to ship it directly from kind of your house, let's say, or your warehouse, or you ship it to Amazon's location and they'll kind of handle all that for you. At this point, I don't like saying it depends, even though it very much does. But it's still really the same expenses that you've seen here. And it's basically specific to whatever you are, I'll say, shipping or providing from Amazon.
Mm-hmm. Thank you. Next question. If we don't contribute to CPP, can we still claim a pension when we retire?
So yes and no. Obviously, the more you put into CPP, the more you would be able to take out down the line. You can get in arguments all day. We've got plenty of clients who say, I don't like CPP. I've got plenty that say, I love it because it's out of sight, out of mind. You've got other ones that say, well, it's not even going to be there when I retire. What do I care? And so there's a lot of varying opinions in regards to CPP and the benefit of it. I'm in the middle. I like to take the political stance every once in a while in regards to what side you should really be on. But the important part is, it is a good out of sight, out of mind approach, but it's very much dependent on, okay, well, what is important to you? Because I'll come back to mortgages. Salaries from your corporation where you're going to pay into CPP is far more favorable from a qualification standpoint than dividends. They like to see you're an employee, that you've got paychecks. So if mortgage is important to you, that may be your best bet. If mortgages or CPP aren't important to you, then you may want to go with the dividend approach. Maybe simpler, easier, cleaner, arguably could be taxed at a lower rate. And there are just some benefits to that. There are some other drawbacks too, like it doesn't increase your RSP contribution limit if you're doing dividends. And so that can be very important to people too. So a lot of different factors, and we do what we call dovetailing. So I'll get into it a little bit, but we've got what's called our virtual CFO program, and at least on an annual basis for all of our corporate clients, we run this exact scenario. When they take out money, what makes most sense for your specific situation based on asking them about 15 different questions. What's important, what's changed, is there any mortgages, any new kids, any new large kind of discrepancies year over year? And it's very important to make sure that your accountant is running these tax planning exercises for you to ensure you take those funds out the most important way.
Okay, thank you for that. And do you mind if we keep going with questions, or do you?
Go ahead. Yeah, no, okay. Go ahead. That's fine.
Couple more. So
yeah.
Other than tax benefits, what would be the reason to do dividends versus salary under an incorporation?
So I kind of just touched on that a little bit. Basically, mortgage, CPP, dividends can be simpler, quite frankly. Again, depending on the circumstance, they can be more favorable from an income tax standpoint. It's also important to note, I'm not sure how deep I necessarily want to go down this path, but if your business is not profitable or you don't have what's called retained earnings inside of your corporation, it's technically illegal to pay yourself dividends, because dividends are considered the distribution of profits to shareholders. And if there's no profits, there's nothing to distribute. So that's a very important piece to factor into the equation when your accountant's running that tax planning. So for the most part, it's really about, do you like CPP? Do you want the structure of salary? Do you want to be able to qualify for a property or two? With dividends, it's more about, okay, well, I'm maybe paying a little less taxes. I'm not incurring CPP. However, a potential drawback to dividends is that all of that money, that $7,200 you see, easy example, is due on one day. That's due on April 30th. With payroll, you're an employee. So that's deducted off of each paycheck and remitted to the government by the corporation on a monthly basis. But with dividends, it's not. So you got to be a little bit more meticulous in your tracking with dividends.
Okay, thank you, Amy. Okay, does professional corporation finance works the same as regular corporation? Not sure.
I think the question is probably, is a professional corporation the same as a general corporation, usually called CCPC? There can be differences. There can be higher tax rates. A lot of that will be dependent on, let's say, social workers or college of physiotherapists and things like that. There are definitely some limitations to professional corporations that CCPCs don't necessarily have. And that's very dependent on industry, where you could basically, it is dependent on the actual college that the professional corporation may be set up under.
Okay, that's it for questions for now. I'll let you
For
continue
now,
your slides.
keep them
Yes.
coming, guys. No problem at all. So incorporation checklist, like I mentioned, we will walk all of our clients through this. We're incorporating anywhere from 1 to 5 businesses a week where it makes sense. And I'm talking just as many people out of incorporating when it doesn't make sense. We want to make sure that it's something that's specific and something that's right for you. The last thing you want to do is just have somebody tell you, yeah, you should incorporate for this reason. And now you're paying 10 times the amount of accounting and legal fees, and there's really no benefit. So we really like to take our time in understanding where the client is trying to go, what's their motivation, what's their profits, is it a liability concern, is it something else that might be forcing them to incorporate? Very important to understand. So do you want a name or a numbered company? So I know Liz had mentioned that. It's called a nuanced name search. So of course you can get a specific business name for your corporation. You can register the corporation provincially or federally. There's pros and cons to those. So what do? Outline your business activities. Of course, get your address, owner's name, SINs, all that fun stuff. Outlining share structure. Arguably the most important piece of everything that goes on. Now, there are some websites, I believe owner.com or owner.ca is a good, easy, simple, cheap one. And for us to incorporate, it costs about 2 to 3 times that. But you want to make sure that you've got your setup done properly. Should you have your spouse as a shareholder? Should you have your kids as a shareholder? Should it be Class A, Class B, preferred, common? What makes most sense from a shareholder structure? So that can help from a future-proofing kind of income splitting standpoint, as well as lifetime capital gains exemption. You could save considerable taxes in that too. So you want to make sure somebody's setting up the share structure properly for you. Choosing your year end. So you've actually got 53 weeks from the date of incorporation to determine what you want your year end to be. Now, to be clear, you do technically have to tell CRA what you want your year end to be when you're actually incorporating, but doesn't necessarily get set in stone until you've officially filed your first corporate tax return. So a lot of people will understandably just choose December 31st because it's clean, it's easy, it's calendar, why not? But when you're incorporated, you could choose whatever you want. You certainly want to choose the end of a month. But let's just say that I've incorporated on November 2nd. You can stretch that out as far as possible, which would take you to next October. And so we often suggest that, maximize it, right? If you incorporate November 2nd and you decide December 31st, you've got to pay us or your accountant for a tax return from November 2nd to December 31st. You can avoid that entirely by stretching your year end out all the way to next October. So there's pros and cons to that. We'll certainly walk our clients through that, but you do want to be strategic in regards to that too. And then of course you got to register for HST, payroll, those kinds of things as well. So we talked about the bookkeeping. We talked about the HST filing. For a corporate tax return, it's important to know that that actual corporate tax return, which is a separate entity and a separate tax return, is due 6 months after your year end. So for simplicity's sake, if you got a December 31st year end, your corporate tax return is not due until June 30th. But if you owe money, that money is due to CRA by March 31st, 3 months after your year end. So same thing when I mentioned with sole proprietorships or partnerships. You want to make sure that you get it done ideally within that time frame. We suggest that 3 month mark, but it's not the end of the world. You've got that 6 months. You just pay an installment, worst case. And I already mentioned before that we do what's called dovetailing. That's effectively tax planning, where we're dovetailing your corporate tax return and you and your family or partners tax returns, the personal tax returns, and seeing what makes most sense for you. Is it payroll? Is it dividends? Is it management fees? It's important to make sure that you're taking advantage of that, because that's an opportunity when you're incorporated. And why not take advantage of that opportunity when you're incorporated? Because you have all of that flexibility to pay yourself what you want, when you want. Even though, like I said, I do have some clients who say, no, put me on a budget, make sure that I'm not overspending. And that is a real scenario, which can help from this perspective. But you want to make sure you're taking advantage of that. And that's where you can save considerable tax dollars in that tax planning and dovetailing strategy. So that's really all I've got for the most part. Like I said, we handle compliance services, bookkeeping, payroll, advisory, VCFO services. Like I said, one of the most important things here, especially for the gig workers in the room, is setting up a proper system. Whether you're using something as simple as right on our website, yourbottomline.ca, our checklists and templates. We do have a simple Excel business template that works fantastic for a lot of people who want to track their income and expenses. If you're incorporated, it's not really optional. You have to use something like QuickBooks Online. But for a small, simple business owner, Excel will work perfectly fine for most people. But if you want to take it to that next level, something like QuickBooks Online will definitely get you there. And so we'd be happy to discuss QuickBooks or any other apps or things of that nature. So here's just some QR codes for some people if they want to take a look at our tax checklist and templates, how to register for HST, those types of things as well. And like I said, I'm happy to send this information over to anybody when we're done here. And that's it for me, guys. I appreciate everybody for joining us here today. And like I said, check out our website, check us out on Facebook, LinkedIn. We're all over the place, and happy to help anytime.
Thank you so much. Let me just double check to see if there are any other questions here.
Yeah.
I have a quick question. Can I ask?
Of course.
Yes.
Oh, great. Thank you. So I'm looking to start selling some products on Amazon East as an e-commerce site. What I'm struggling with is it worth incorporating at this point? Because I'm just doing a pilot. I'll be bringing some goods from India and I'll try to sell them here. So I don't want to incur all the expenses of incorporating without even knowing if it would be a success or not. So what is the alternate way I can go about it? Like, should I go under sole proprietorship, or what would you suggest in a situation like this?
I would suggest we set up a call.
Okay.
But I mean, ultimately, all jokes aside, it is kind of at its core, in a situation like Amazon, it's usually not about liability because you've got insurance and Amazon covers the majority of that. So it's usually going to be about profitability. And so the question really is, are you making more money and you don't need to answer this in front of everybody, but are you making more money than you need to live? Would you be able to leave some of those funds inside of that corporation and not touch it for years to come, treating it like a pension plan, and take out less than the business is making, and therefore you're going to be paying lower taxes on the net income inside the corporation? That's one of the main scenarios you'd want to have somebody run for you in determining does it make sense. And a lot of people say, well, I'm not sure what my personal life costs, so I'm not sure how much money I need to take out. And so we also have sheets, nobody likes this word, but effectively a simple budgeting sheet where you would put in some of your, what does my house cost, what does my car cost, what do my groceries cost, to determine what you would potentially need to take out of your corporation on a regular basis to run that scenario planner for you. But that's what we do for a lot of clients, is kind of run those scenarios just to see, does it make sense? Or, hey, you know what? Is my bank balance keep staying the same, or wherever I am? It's important to know, will you be able to leave any money inside the corp?
Okay, thank you. I'll reach out.
No problem.
Okay, let me see. I think that was it for questions. Does anyone else have any questions? Feel free to unmute yourself as well if you do. I don't see any. A lot of great feedback, people thanking you. Very informative.
Thank you, guys. Yeah, appreciate everybody for coming. Absolutely. Thank you for making the time. Absolutely.
I don't see any other questions. I'm just going to stop the recording so it actually